Hey everyone, hope you're doing well. This is the deep dive. My name is Drew Creekmer. I'm the Director of Advisory Services here at Creekmer Wealth. And I'm joined, as always, by John Creekmer, our founder and senior wealth advisor. And John, we're going to talk markets today, some interesting dislocations that we're seeing, and walk through what everyone is talking about, which is Nvidia, which is an and discuss that. Before we dive into it, uh, what is front of mind for you?
I'll tell you what, front of mind for me is we're heading to the summertime, and we're actually already here, and enjoying the weather, enjoying the season, enjoying all the activities surrounding what that means. But also, I know it's old adages when it comes to the market is things like sell in May and go away. And so I remember talking to my dad one time. I said, "What does that mean?" He said, "Well, all the people that are really positive in life that want to buy things in the stock market, they're all on vacation with their families in the summer. So they're not working. And that leaves the people that are left over as all the negative Nellies that are out there selling everything." And so I thought, I don't know if it's that simple. Is that what it means? But it does mean that we usually see a little bit less volume. We see a lot of consolidation. We do see historically a lot more starts and stops along the way. And so it's when you really want to make sure that you know what your goal objective for your money is. And if you're going to need, in other words, if you need cash sometime in the next 2 years, 12 months, you might want to make sure you protect it heading in the summertime. But also, you need to be looking to say, what is causing the markets to move, whatever they did the first 5 months of the year? Is it one particular event? Is it a particular industry, particular name? What is it causing stuff to move? And what's your exposure to that? And what could that mean moving forward for the rest of the year? So, my mind is, what do we do in the summertime when it comes to the stock market? And that's just kind of where I'm sitting right now.
Yeah, yeah, absolutely. So, John, so far this year, it's been a pretty solid year for markets across the board. But we know back in November, the Federal Reserve definitely gave some thoughts that they thought interest rates were going to be able to come down here in 2024, which really caused that run up in the market that we've seen. So, in your mind, what's the one driving factor that's causing markets to move today?
I do think that one driving factor truly is interest rates. At the end of the day, as far as in the short term, I think in the long term, it really is are companies making more money or are they not making more money? And so we see earnings reports come out that does sway the markets as far as on that daily or in the weekly around that earnings report. But right now, it's been for the last 2.5 years, the overarching driver of all movement has been what's happening with interest rates, whether they go up or go down. And a lot of times, a lot of speculation as far as what's going to be happening, and that's whipsawed the equity markets in some unbelievable ways. But we are seeing the interest rates actually come down a smidgen, but it's not being driven by the Federal Reserve. And so actually, the markets have done a better job of knowing where the economy is at and predicting the economy than what the Federal Reserve has done. And so, with that being said, we do think rates may slide a little bit, but we don't see the Federal Reserve actually coming in and making an adjustment to interest rates. Definitely not before the election coming up in November. But it would be a surprise to me if we see anything much done by the Federal Reserve before the end of this year.
Yeah, absolutely. That's the big economic thing that's driving the markets. Now, on the specific stocks, we've talked about the Magnificent Seven back in 2023, accounting for a massive percentage of the total return in the S&P 500. But it's been interesting, John, to see that a number of those generals have really struggled so far here in 2024. But the one company that's just doing phenomenal and driving the market is Nvidia. The AI trend has really taken off, and that's been a driver of returns here in 2024. We're going to put up an interesting chart showing just the overall size of Nvidia. It's a massive company. Nvidia itself is larger than a number of household names combined, like Netflix, Walmart, and Amazon. And so it's really fascinating to see that one company is kind of pulling the market on its shoulders. So, John, what are we seeing in the charts with Nvidia? What's really the question there?
I'll tell you, let's take a step back from there. I mean, Drew, NVIDIA only has about 29,600 employees. So we're not talking a mammoth company, but what they do extremely well. And so they make semiconductor chips. And early on, back in 2014, 2015, we started investing in NVIDIA for a number of clients back then, almost 10 years ago, um, simply because they were really providing the guts of the semiconductor chips into the computers of what was driving the expansion as far as an alternative currency, and the big name there is Bitcoin, and so a digital currency. And so we needed to have super fast computers that could actually process large amounts of data. Well, they were a driver in that. And then we also saw that how high speed gaming started taking control, and then that pushed their demand for their product to go at a faster pace. And then in recent years, the last 18 months, it's really been the drive of artificial intelligence, the whole AI space that we're seeing to really believe to be a transformative movement across the board in all technology. And so, and Nvidia is the biggest player there because they have the absolute highest quality chips that can compute at the fastest paces. So that's what they do, and that's really why they've been so on fire. Now, the question is, whenever a stock goes parabolic, in other words, when it just goes straight up, what do you do with that? And Drew, it's been incredible. I know I was just talking to a client, just got off the phone with them a little while ago. And 2.5 years ago, we invested $14,000 and it's now worth $170,000. And the question is, what do we do with that? If we sell it, it's a non-qualified account. If we sell it, we're taxed on it. But if we don't sell it and it drops, then we've just lost all that gain. And so it's a lot of questions, Drew, and it brings into what in the world do you do with that one holding, and especially when you consider how that one holding really holds a lot of sway over the entire broad-based markets.
Yeah, absolutely. And so, John, this is where we've talked in the past about fundamental and technical
Mm.
analysis. We're really trying to answer that question of what do you do? You have to look at both of those areas. And so fundamentally, we've done deep research on NVIDIA because we've owned it for years. And we love the company and the direction they're going and their revenue, which I know you talk about all the time. Revenue of companies is what drives the stock market. Their revenue is expanding drastically. And we know the mega cap technology companies like Amazon and Google, they're spending billions of dollars every single quarter buying NVIDIA's products. And so we know the revenue streams are there. However, when we look at the technical side of things, which would be looking at the chart and seeing what the momentum is of that stock, it's really hard to validate, do you hold on to this thing or do you not? And so, John, when you look at that chart for NVIDIA, now what are you seeing on the momentum and just overall with where that stock is currently at?
I mean, it's just an amazing chart when you look at it. You can clearly see, we had a little bit of a pullback in March and April this year, where it dropped from about, let's say, they just split recently, right? And so this last day. And so, but as far as on a split adjusted basis, the stock went from $93 a share all the way down to $82 a share. And there was some people that didn't want to own it, but right then it just accelerated to the north over the last month and a half to where now it's up to $122 a share, or a 50% increase. So when I use the word parabolic, that's what we mean is when things move in such a sharp upward trajectory to where the percentage is phenomenal. So at the beginning of the year, we're sitting at $47 a share. Back on January the 5th, January the 2nd, we were sitting at 49.08. So at that price, we're looking at going from 49.08 to 122. That's just a phenomenal growth. So then we start to look at the charts, and it is so far above the 50, the 100, the 200-day moving averages that would generally comment to us that we're seeing a tremendous momentum on the upside. But once we start breaking down under the surface and we look at the momentum on the chart, we're seeing the momentum actually drop down, even though the stock price is going higher. And so, in the last 2 weeks, we've actually seen momentum start to slip a little bit, and it's making us then start to see this divergence is presenting a little bit of question of are we going to see a pullback in the stock price once we get the split adjusted impact taken care of. So, Drew, we do have some concerns we could see a little bit of a pullback in the short term. And so if you're a long-term investor, you might say, I really don't care about that. I'm going to hold it the next 3 to 5 years or 5 to 7 years, play a full market cycle. But we do see how we could go from 122 potentially down to somewhere in the upper 60s, low 70s on the low part. It might make sense to take a little bit of profit off the table and then look to try to buy back in at a lower price sometime in the future.
Yeah, absolutely. I think you hit it on the head, John. Now is a good time to consider making those adjustments. Now, obviously, if you own NVIDIA in a taxable account, there's tax implications that come along with that. And so there's definitely a conversation to be had with your advisor. broadly, we've been definitely using this run up to take gains, not just in Nvidia, but in other technology companies to really see what shakes out with that big economic trend with interest rates that's driving the
Mhm.
overall economy and market. So it's a good time to be a little bit more cautious, but everyone's situation is unique. You all have different goals. And so having that conversation with your wealth advisor is something we would strongly encourage you to do, just to see, hey, does it make sense to take some of that gain and put it in the bank right now, and see how things shake out. And so, guys,
Yeah.
that's big picture what we're seeing in the market, and with a company that's a bellwether of the broad market at this point in time. But John, what's your one parting thought here for us today?
You want to make sure that whatever decision you make is strategic and is financial and is truly driven by numbers. And so all the numbers point to Nvidia being a phenomenal long-term holding, and yet the numbers also dictate there's doing some short-term choppiness along the way. And so, should you sell it? Should you sell a little bit, take some profit? Well, that should tie into your goal objectives. Or when you talk to your advisor, you may want to consider saying, hey, we need to decrease our exposure. What are some other ways to do that without just flat out selling it? Well, maybe you talk with your advisor about setting up a donor advised fund. And once you look at all your charitable contributions for the next 2 years, then maybe you simply transfer $40,000 or $50,000 over to a donor advised fund, and you hit the cash that you would have given to charity and put it back into the account to be able to reinvest those dollars as far as at lower prices sometime in the future, which would be a more tax efficient way of actually decreasing exposure. So follow the math, follow the numbers, make logic based decisions that hit your goal positions and hit your value statement. And when you do that, you come out further ahead.
Yeah, absolutely. Well said, John. So, guys, thanks for the time. If you have any questions, our team is standing by. Absolutely reach out to your advisor if you want to talk about markets or an individual stock that you own and how it relates to your overall goals. So, we'll talk to you all soon.